Microsoft Q3 earnings are out. Microsoft Q4 guidance also just announced on the conference call. We'll bring you both the Q3 numbers and the Q4 guidance and talk about why shares of Microsoft in the after hours I am seeing are popping all the way up 9% to cross the $300 per share mark, a mark we have not seen in about a year's time for Microsoft. Have you missed the rally with Microsoft? Is it too late to buy shares of Microsoft if you're like me and you hold shares? Are you thinking about selling some of them tomorrow? We'll discuss some of those questions and answers here on today's show. What is going on, investors? Hopefully, guys are doing well out there. 4 times a year, we get Microsoft earnings, and today was one of those days. Over the last year, stock's basically flat. That doesn't factor in the after hours. The stock is popping, but year to date, shares of Microsoft up nearly 15%. The company reported their Q3 earnings after the bell. They beat on the revenue side. They beat on the profit side as well. Revenue is coming in at, we'll call that $52.9 billion. Wall Street was expecting a number closer to $51 billion. Now, here's the all-important thing for Microsoft. When they announced their earnings, like most companies, at about 1:15 Pacific time, 4:15 Eastern time, Microsoft waits until about 3 p.m. Pacific time or 6 p.m. Eastern time to give you guidance on the conference call. That just came in, and they're expecting Q4 to be actually relatively good. Revenue between $54.85 up to $55.85 billion, factoring in solid cloud growth and Office 365 growth. Consensus estimate, as you can see here, was for 54.94. The high end was 58. The low end was 52. Microsoft threading the needle, coming in right in between that with a very strong quarter. And as I said, before they announced guidance, shares were up about 5%. After that guidance announcement, up over 8% in the after hours. Now, what is going well for Microsoft? Well, pretty much everything. Other than Windows OEM, which is your Windows that are installed on laptops and computers, and if you've been following any of the data when it comes to laptops, personal computer shipments, those are down tremendously. Everybody had a huge upgrade cycle in 2020 and 2021. Nobody needs a new computer or a laptop. And I say nobody, just less people from a growth perspective. That is down 28%. But you had your Azure up 27%. Your advertising business up 10%. Office 365 up 14%. Your cloud revenue up 22%. If you factor in a constant currency, many of these growth rates are even higher. Now, when we come over here to the financials, you are going to see why these shares just continue to rally higher. This is just such a wonderful set of financials. You had your total revenue coming in at that $52.9 billion. Again, that was 7% growth year over year on that revenue side. Last year, they had $49.4 billion. Now, this company's done a very nice job controlling its costs. Your total cost of revenue over the last year went from 15.6 up just fractionally to 16.1. That gave you gross margin this year of $36 billion. So off of $52.9 billion worth of revenue, you had total cost of just $16.1 billion, giving you a gross margin of $36.7 billion, up just about $3 billion year over year. Now, research and development up just fractionally from 6.3 up to 6 point, we'll call that $7 billion. Your sales and marketing up again, just fractionally from 5.6 billion up to 5.75. Your general administrative up a little more than fractionally, but from 1.5 up to 1.6. Your operating income, where you take your gross margins subtracted by your operating cost, up essentially 10% year over year, not quite 10%, but very close, from 20.3 up to $22.4 billion. Net income paints a similar story. Just a beautiful set of financials there. Now, from a cash perspective, still plenty of that sitting over here on the balance sheet. We'd have to imagine Microsoft win, and it looks more like an issue of when they close that Activision deal. Some of this cash will drain through the balance sheet, but look, it's just sitting there. It is collecting interest as opposed to previous years, but they will get a performing asset, positive cash flows, positive earnings when they acquire Activision. They've got some debt on the balance sheet, but nothing to be overly concerned about. Now, here's really where it gets exciting for Microsoft. You pull down a net income in the most recent quarter of $18.3 billion. Last year, net income was $16.7 billion. They have their add back and subtractions. You get your operating cash flows. These are your cash flows operating Microsoft, the cloud business, the ad business, the 365 business. Last year, you're at 25.4, down just slightly to 24.4, but nothing to be overly concerned about. They bought back $5.5 billion worth of share in the most recent quarter, a deceleration than where they were. But I think we'd had to expect this because they're going to close or likely close on that Activision deal likely over the next, couple of weeks, maybe even months. And so maybe preserving a little bit of that cash. Also, the fact the shares have been on a monster rally. So pumping the brakes on the buyback actually respectable from a cash usage from Microsoft last year, $8.8 billion. This year, again, $5.5 billion on that buyback. The dividends ticking up as well to about $5 billion. Your investing activities, here's where you can see some of that Chat GPT money, $9 billion purchases of investments in the most recent quarter. All that is about the run rate the company is on. All said, $24 billion of positive cash flow from operations, about $10.3 billion of it used to pay dividend and buy back the stock, and just $3.2 billion of it used in investing activities. They bolted on a fat $11 billion worth of cash to the balance sheet just in the last month. That's when this company can make $70 or $80 billion acquisitions, and it makes you concerned a little bit. Just understand they are producing boatloads of cash. From a technical perspective, this one has gone parabolic. Since November of last year, we've been making a series of higher highs, and those highs just keep getting higher and higher in the after hours. I'll put it here on the screen. We're trading all the way back up here to roughly $300 per share. We have not seen over $300 per share since April 2022, a year ago. From a technical perspective, we should now have support for Microsoft shares back down here at 290, and obviously support for the shares much lower, probably all the way back to 250. Folks, this is an uptrend. Doesn't take a technical chart genius to understand that. In uptrends, you can buy the dips if we get any serious dips in Microsoft shares in the coming weeks and months ahead. It is a buying opportunity from both a technical perspective, but also likely a fundamental perspective as well. Yeah, the forward earnings estimates on this one, not cheap, but the fact in this environment, this company is pumping out revenue guidance that is meeting Wall Street estimates. It gives us confidence that potentially here we can reaccelerate these revenues when the economy gets a little bit better, when their OpenAI investment maybe produces more revenue, and when you bolt on Activision at some point. Well, yeah, this revenue is likely going to continue to accelerate, and likely cash flow, operating profits, and net income. Needless to say, this is a solid company. It remains a hold for me. You start retesting some of these highs up at 320, 330. I wouldn't blame somebody that wants to de-risk their portfolio or take some profits. Would not blame it. But right now, this is on a rally mode. I like to let my winners run until they prove that that run is over. Right now, Microsoft is running, and you let your winners run until the chart tells you something different. Hopefully, guys, enjoyed today's video. We'll be back again soon with more. Good luck with your investments.